We are talking about an interesting note which has come out from IIFL's UK head, the European business head Ayon Mukherjee, where he talks about how there is need for change in the approach to the market. He says that stocks like RIL, L&T, Infosys will be better bets in the year going forward, because last couple of quarters we have seen, apart from the correction of course, that momentum investing and trading was really being very profitable for investors. So IPL 2020 kind of investing, where there were immediate triggers and the stock prices would run up. But now he says from here on, markets are not expected to go give much return on a broad based basis. For it's time to go back to traditional stock picking and test match kind of investing. So he's come out with a couple of stocks like Equities, Biocon, Yes Bank. Biocon, he believes that the profitability will rise very sharply over the next 4 or 5 years. Similarly, Reliance and Infosys, they say, would continue to change the complexion of the company. Infosys focuses more on digital and hence can be a good bet. L&T, Reliance of course is going towards the consumers side. So again, change in complexion and hence valuations. L&T too, which has been languishing for last many quarters, will change its complexion by shedding a lot of non-core assets. So he's making a case that going forward, specific stock picking will actually reward investors much more than momentum trading and quick T20 kind of investing, which was getting rewarded last 2 to 3 years.
Okay, Ajay, thanks very much for highlighting that for our viewers. Ayon Mukhopadhyay, who's Director UK and Europe, India Infoline Institutional Equities, joins in with his perspective. Ayon, it's great to have you on the show. Thanks very much for taking out the time. Let's start off with the one question which is on everybody's minds. Nifty is at all-time highs. How are you seeing the investment climate in India? Do you see that even at record highs, there's more money pouring in, there's more interest when it comes to investing in the India story?
Yes, you're right. The Nifty is at an all-time high, and though it is a thing to rejoice about, I would say that if we look at it in a deeper introspection, you would see that the last leg of the run-up, in the sense that we had for the last 2 months or so, has really been done by a selective few stocks. So you could see that, and that shows that the shift of the money has happened mainly from the mid-cap names or some of the small caps names or some of the very, very overbought names where you could not see the earnings momentum really justifying them, to some of the very, very high quality names where people are seeing a sort of earnings momentum supporting that. So I would say that it is slightly illusionary to rejoice at Nifty being an all-time high and to think in the very short term that this is a trend that is going to continue. So I think the next 1 year or so will be a period of consolidation, and it'll be a little naive to extrapolate the gains that we had over the last 3 to 4 years over the next 1 year or so. So I'm looking at it in a slightly cautious way at this point of time.
Right, there's a test team that you have developed, which is quite interesting. You're drawing parallels between sports as well as the markets. Take us through how that analysis works.
Well, it is first of all not a team. It is basically what I've tried to show in this report is that in India for the last 3 years, I was trying to like a light-hearted report on the eve of the India-England Test series, which begins on Wednesday, and metaphorically trying to think with equating with the Indian market's participation. So what we saw over the last 3 years or so was a slam bang style of investment where most of the stocks went up, and some went up with deep-rooted fundamentals, but most went up with a lot of hope. A lot of companies went up with valuation really did not support them. But when that happens, and now when we have reached that stage of the zenith of valuations, that one needs to now take a hard look, and especially in a global environment where things are receding, which we can discuss a little later on what are the global concerns I have. So what are the stocks that you need to put in? So again, speaking in the crypto terminology, is it time now to send the likes of the Rohit Sharmas back home and get back the test purists like an Alistair Cook or a Pujara in the team? Now, obviously, I've not put in someone like a Kohli, like an HDFC Bank or a Kotak Bank, which is a given. These things you will need in your team.
Okay. Now, walk us through the key players and the rationale for choosing them, especially Equitas and Biocon.
So I'll start with Equitas first. So Equitas, if you see, most of its peers in the MFI and small finance bank space has really performed exceptionally well. So this is the stock that really has not performed. Now you could ask why it's completely missed out on the party, and some of the investors are pretty sad about it. But the reason is because this guy is probably not suited to the cyclical play that it went. So it had a change in strategy. It moved out from the microfinance space to a small finance bank, which a rationale that many people thought was not prudent enough in the sort of market that we had. The peers that were, we know much elite players in the microfinance space, valuations are, 2 or 3x of what the valuation that bank finances. But it obviously had a rationale. It has got a very, very strong team, management team. It has put in the cleanup of its books. And I believe that it is at the cusp where its operating leverage can really perform now, and its ROEs can go up to the mid-teens or even the high teens. The valuations are very, very reasonable. Its book can grow. Its book can grow very, very fast. And so on a long term or even a medium term, I think this is the stock that can really perform. So that is why I have included Equitas. And coming to Biocon is the company is reinventing itself with its Mylan tie-up. So it is now is getting approvals for its biosimilars. And if I have to believe my analyst, it's potentially, if it can get all its approvals in place, the revenues can actually go up by a whopping 6x in the next 5 years.
How comfortable are you with the current valuations in the large cap space?
Yes, there is a lot amount of froth in the large cap space, and that is why I'm very, very concerned. I think the markets itself is a lot driven by liquidity. So there is a lack of options, and hence people are chasing growth at any price, growth and quality at any price. So I do not see a correction happening in that space. But ultimately, we will come to a stage when the re-rating cannot happen anymore in some of these large caps. So if you have stocks at 50, 60 times valuation, growing at only 10 to 15%, the best that you can have return from these would be the returns will mirror the earnings. So you cannot have a period of further re-rating happening from these names. So yes, I think that is so. Now all the eyes will be on the earnings delivering for these names. So yes, there's a fun. And for the mid-cap space, I think yes, after a certain time, people will start looking at nibbling back on those mid-caps where the earnings will start again coming back. But I think what the market correction in the mid-cap has basically done is, and I sincerely believe that has happened, is it has taken out the quality factor, very, very important. So we were seeing that, the mid caps, irrespective of how good or bad the corporate governance is to go up. But I think that prudence has come back, that reality check has come back in the market, and people will be putting a bit more of a quality premium on some of them going forward.
Which mid and small caps will you be entering in the current carnage?
It's difficult to say that. We'll have to look at. I mean, the thing is, I think it's still a falling knife, and I will still have to look at. I will have to still wait and watch as to where the things happen. But on a long-term basis, if there are businesses which are highly, it's very, very good governance, and if the earnings continue to deliver, I think the thesis will not change for companies which were there 3 or 4 months back and now. So anything on the consumption-driven space, like even in a company like a Blue Star, for example, on the consumption, we continue to like that company. Some of the NBFCs, like Equitas, obviously I mentioned. Some of the NBFCs, we continue to like them. So there are quite a few names if we're going the complete basis of them. But what I would say is we would continue to like companies where the fundamentals themselves has not completely changed. And if there is earnings momentum to come on them, I think we can start nibbling at them.
Okay. So any top picks that you may have at this juncture, stocks or sectors that you like?
Okay, so in our research, that there are 3 ways that we have bifurcated our research. what we have basically done is that we have tried to figure out what are the stocks where we still see an earnings momentum there, and the valuations, though expensive, still are reasonable. The second bracket is that there are stocks where the valuations are too utopian, and we do not feel the valuations, the earnings can really catch up with the valuations. And the third is the bracket where we believe the stocks are completely bombed out. And though there is no immediate trigger, on a long-term basis, these stocks can be looked at. So I'll give you a couple of examples on each of these brackets. So the first bracket could be definitely stocks like HDFC Bank, even a Yes Bank, and even ICICI Bank, I would say, would come into this bracket. The second bracket will be, your India consumer basket, where I'm not really sanguine on buying them, whether where you have this 50, 60 multiples of stocks, or even banks like an AU or a Bandhan, where they are very, very good franchises, but I really cannot see tremendously large upside on them, though they are excellent franchises. And the third is the most interesting bracket as per me, where you can look at good quality companies like, say, a Tata Motors, for example. Let me look at Tata Motors. Now, Tata Motors is a stock that has been completely decimated from its peak, and the stock really doesn't have much of a downside from here. Even all the tweets of Trump seems to have been built into the stock price now.
Ayon, great to speak with you this morning. Thanks very much for sharing with us your ideas and your thoughts.